All right, welcome to I think we're at our third official podcast. Um, Today's special guest is Pi. I can't hear you, but it says your mic is on, so I think you're here.
Can you hear me now?
Yeah, I can hear you there. What's up? How's it going?
Good. Sorry, this is my
Awesome.
husband equipment. I'm good. I'm good.
Nice.
Oh,
Um, cool. So today we're gonna talk a little bit about some of the news for this week, some analysis and our market sentiment going into next week. Then we'll take a little time to talk real quick about some Q&A that the members suggested. And you can stick around for that if you choose, or you don't have to. But before we jump into the news segment, how about we get started with just a couple of questions for you? Because I know this is something that a lot of people um, get a lot of interest in the types of trades and your trading style. So how did that come about?
oh, me?
Because something that's definitely risky. Yeah, yeah. So like a little bit about yourself, just how you've gotten to, this trading style that you have now.
Well, I started trading 2017. My husband actually introduced me to this. I wasn't so for it, and he's more of a penny stock trader. So he
Mhm.
he taught me about penny stocks, and he took that Timothy Skites guy. I think that's his name, Sites or Skites or something.
Yeah, yeah, I've
Um,
heard of.
so he introduced me to that, and it was okay, but I could never catch on to penny stocks. And then, I started off with Robinhood. So one day I got like an email saying, "Ooh, option trading is going to be available." So I was like, "What is that?" So I learned it. And my style is more, I'm cheap. I don't like risking a lot of money. I'm so cheap where it's like I would get 10 contracts for like 2 cents each because I'm cheap. I'm scared to lose. And they say scared money don't make no money, but I'm scared to lose money. And so
Mhm.
when I joined Twitter, I know there's a few people up there that's not good traders. They give advice and give news and stuff, and so I have notifications turned on so that every time they tweet something, I get it straight to my phone because I know if they have like 50,000 followers, everybody's gonna jump into the same thing. And so, for
Right.
instance, like today, American Airlines, Will Meade tweeted about a stimulus. And so I was like, oh, well, let me hurry up and get into it. About 10 contracts at like 19 cents each. And within 2 minutes, it jumped up to like 30 cents a contract. And that's because the premium is spiking because everybody is following Will Meade on Twitter. And so everybody is like thinking that everything he say is going to happen. And 9 times out of 10, it go the opposite way. But I ran with it and took my profit once it hit 33 cents per contract. So I just play the news and sell it, except for
Right.
Tesla. I
So
kind of like
that
Tesla.
trading style, is one that, I would say if it's your niche, is that you've gotten this combination of, a lotto style, right, where it's a little faster, a little riskier,
Hmm.
um, but then you're also scalping, really, and you have
Hmm.
this refined ability to scout trades, not so much on technical indicators or on a fundamental basis, but
Yeah.
instead more on the social sentiment and the
Hmm.
news side of things, right?
It could be fake news, but it's just everybody is gonna run with it. So
Right. Any news, as long as it
yeah,
moves the price, right?
yeah,
And so
exactly.
like kind of developed this ability, I think, to very easily navigate news and very
Hmm.
quickly react that a lot of people still don't really have, this kind of experience with. And so
Hmm.
it's one of the things that's great about your style is that you can afford to, trade some of these riskier contracts because you know
Yeah.
that they might move a little
They
faster just how
and
the
they might
news is
not move
working.
at all. So it's really a big risk.
Right. Right. And so, that's one of the other things is that I know a lot of people talk about how your trading style tends to lead to like really large profits percentage wise.
It
And that's
can.
because, I think when you trade these contracts, really, you're kind of getting yourself into a position to
Hmm.
profit very quickly off of maybe a undervalued or, maybe a slightly out of the money contract that someone might not,
Exactly.
be
Yes.
to
And
jump.
because that premium is gonna spike. Like as soon as he tweets, the premium just changes so quickly. I'm like, oh my gosh, after a tweet, and the stock
Yeah,
didn't even move just yet, but the premium of the contracts jumped really fast, and then the
right.
stock price started to move.
And that's something
So
that you
it's
kind
just
of see
crazy.
happen with a lot of the sweeps as well, where, in the Discord, if we get alerts to sweeps,
Yeah,
when
that too.
contracts are being bought, you're going to see those prices move very quickly
Hmm.
just off of that IV, just off of that premium. The stock might not even move, but just because so many
Yes.
contracts are
So
being
many.
traded,
Yep. Hmm.
you can kind of play in that really small area where you're
Hmm.
making money just off of any kind of pump on that.
Yes. I noticed that with Zoom today, that golden sweep that came through.
Hmm.
um to go long on it. No, that wasn't golden, but it came through to go long on Zoom, and I
Right.
went and looked at the contracts, of course, because that's a big mover, and but it was already too expensive for me. Like I don't like I'm cheap, so it wasn't cheap for me.
Now, do you normally trade like primarily day trades, right? Because I know, sometimes you'll play those smaller swing positions for like earnings or lottos. How would
uh
you say that split
with
is?
earnings, um if I'm risking $30 like I did when Zoom had earnings, my contract was only like 40, $50, I will hold that because it can go to zero. It's just a
Absolutely.
risk. I didn't think Zoom would go up by that much. Of course not, but we never know. We have seen it happen several times with different companies after earnings where it has a big move and a short squeeze. And so some earnings, sometimes I do like to play the run up. And if I do play the run up, I sell it. I buy it the week before earnings and I sell it the day of, and then I buy something else further out to hold with the profit, with some of the profit. And I keep some of the profit.
And I think, yeah, and that's one of the strategies we were talking about last week, where, you can kind of play earnings without
Hmm.
actually. And so,
Yeah.
if you're doing something where you're playing the run up and then you're selling your contract ahead of time,
Hmm.
locking in profits, now you can afford to get maybe a cheaper
Yes,
contract
exactly. Hmm.
and only pay earnings with the profits that you earned during the run up.
Yes.
And so that's something that like you can kind of navigate pretty easily. I think one of the things that, a lot of people don't really have a handle on is their news sources, right? When it comes
Yeah.
to sentiment for earnings, sentiment for news,
Hmm.
things of that nature. Now, I know you're a huge proponent of Twitter and getting your news sources
Yeah.
from there.
Hmm.
What kind of news do you look at or value more when you're considering a trade?
What kind of? I mean, I look for buyout rumors.
Hmm.
Anytime, I think it's Walter. Walter, is it Bloomberg? I think that's his name. I have his notifications. All his tweets come straight to my phone as soon as he tweet, and so it can be a buyout rumor. Anything that he tweets or will tweet, the stock it reacts. There is a lot of followers,
Right.
and the
So you
rumors,
can
of
kind of
course,
see that.
the rumors. You don't know if it's going to be true or not. So that's something you get in and get out, like
Right.
a
And I would
buyout
say
rumor.
like the other ones are like maybe vaccine, COVID
Yeah, the
related stuff.
vaccine, exactly, or something where they'll tweet that Trump is gonna make an announcement about a secret
Mhm.
vaccine announcement, and so of course all the vaccine stocks are gonna go up because they don't know which one he's gonna mention. But I
Right.
wouldn't
And I
hold that
saw,
overnight. I wouldn't hold it overnight because
right,
you don't know which one. So it's the
mhm,
AZN, the mRNA, the NVAX, the common ones. The only I
right.
think they have like five or six out there right now that could
Now I know
possibly.
RNA, Moderna, Moderna. is one of the ones that you play most often, right? So you kind of trade that one pretty often, up and
Eh,
down, depending on the news, right?
But anytime I see a sweep come through that
Right.
don't come through often, like Beyond, same thing with Beyond. Anytime I see a sweep out the blue, like a call
Hmm.
sweep, then I'm like, okay, they haven't had one of these in a week or two. It might
Right.
have some news come out after hours. Unfortunately, this week mRNA did go up, was able to sell for some profit, but they never released any news based off of that sweep. But it was still um, an advantage to be able to make something off of it based off of that unusual sweep that came through. But when they don't
Absolutely.
have sweeps, you know how you have some stocks that have sweeps come through every day, like Apple, SPY, mRNA, Beyond, Invex, INO, AZN. That's like very rare. And so when it
Hmm.
do come through, it's like, maybe they're gonna announce something after hours or later in the week.
Right.
Like there
And I
was
think that's
some
one thing
contracts.
like posted was that on a red day you were seeing some call sweeps come through, and
Hmm.
that allowed you to play a trade just off of your expectation for an opposing movement.
Yes. Hmm.
Right. And so it's like a little mix, I guess, of paying attention to, the momentum, any type of
Hmm.
swing, and then also paying attention to any kind of news, which I know, you tend to be one of the first people who's
So
always posting the newest
I
news,
hurry up
right?
and I
It seems like
screenshot it. I hurry up. Let me hurry up and send it to the group.
uh-huh. So would you say you're in the trade before you send it, or
No,
do you
no.
send it first?
Sometimes I didn't send the one today because that was just too quick, and I
Right,
was at
right.
work busy. But like the Walmart one, you remember the Walmart one, right? I think that was a couple months ago. That I sent that to the group first, and then I didn't
The
say which
TikTok.
one I was getting into, but I hurry up and I screenshotted it and I tried to crop it that way you don't see all my time and my battery going dead and stuff. And I tried to hurry up and send it off, and then I went and got my contract. I try to
Uh-huh.
hurry up and send it to
For
the group
anyone who
first.
I know, and that was a crazy day because I'm pretty sure Walmart pumped up
It did.
north of 10 points on that.
Yeah, and
And so for anyone
it
who
did.
doesn't remember, that was the day that the news released that Walmart was looking at a partnership or some kind of deal with Microsoft into entering TikTok.
No,
And
no,
I'm
no,
pretty sure
that's
that was
not the
the first.
one. No,
Oh,
that
you're
it was
talking
when
a different one.
Walmart announced the one about the Prime thing, the first announcement that they was going to get into this subscription.
Right, right.
And then it kind of popped
Okay.
up, and I know you had contracts that was like the next week over, and then it went red, and then towards like that Thursday and Friday it just spiked back up. That's the
Okay.
first one,
So I
and then
mean,
the
you saw my
Microsoft one.
feed a couple times then too,
Mhm.
because I was thinking of the TikTok news,
Mhm.
and it was crazy because your post in the Discord was the first thing I heard. Like, I got Twitter on my phone, I got news through, Thinkorswim, and I have my like scanners, but I didn't see it. I missed it somehow. I didn't
Mhm.
see it. And your post about the TikTok deal with Walmart was the first thing I saw. So you were on that one, and as soon as that TikTok news came out, that was back when Microsoft was pumping off of it, and this was a couple
Yeah.
of weeks ago.
Mhm.
Looked more
Mhm.
promising. Walmart went up to like 140 from like 130 that day,
Yeah.
or
Mhm.
something in that price range
TikTok.
very quickly.
Mhm.
Yeah.
Yeah.
So
So
that's where like it's hard to, I guess, be on top of the news, but if you are, there's definitely plays to be
not really,
made.
because if you already on your phone, you just set the
Right.
notifications for the
Hmm.
people you follow on Twitter, the notifications for their tweets to go straight to your phone, and it just flash like the alerts from the Discord channel. It just flash across your phone.
Yeah, yeah, and
That's it.
you can act on it pretty quickly. It's like
Yeah. Hmm.
Walter Bloomberg is a really good resource, a free resource
Yes.
as well. That,
Hmm.
he shares a lot of headlines as soon as they're coming in.
Yes, he do.
Uh,
He be one of the first ones that share it before you hear it from anywhere else. It comes through him first. So he's a
would
good
you
guy
would
to follow.
you read primarily? I know he's pretty reliable.
I do.
With how he's posting, so I follow him as well. Would you say he's like your number one as
He
far as
is.
like
He is. I
sources?
trust him more. Yeah. Hmm.
No, he tends to be, and he now has a Discord, a free Discord that you can join as well if you don't
I
like.
did, but oh my gosh, they were just talking crazy. I had to get out of there.
Yeah, it was
You
very, it's a
talking about?
big, I think the Twitter feed is a little better if you're trying to get news
It
from there.
is. They was it was crazy in there, and they was it was a lot of people, and not even talking about stocks. So I didn't even want to associate with traders that was in that Discord. And I mean, he was still posting
Absolutely.
on Twitter, so it's better to just get it from Twitter.
Yeah, right.
Cause he's
Just
still
cut out all
he
the
doing it both places. Yeah. But
Mhm.
no but actually he's doing it on Twitter first, and then it's like the Discord get it next. So I did
Right.
notice that.
Okay.
So
Okay. Well, that's good. Um, One of the things I want to loop back around on was we talked quickly about some of the vaccine COVID stocks and, our opinions there. How do you feel? What do you think in terms of vaccine news and the market here? Because, we do have some uncertainty where, obviously Trump is trying to get this turnaround very quickly on any type of vaccine and
I think it's
also
before election, yeah.
right. And I think that news for him, not only for the market, but for him as well, is very essential
It is.
to, him as his campaign and, just the work that
Mm-hmm.
he, how do you, how do you feel, about the fact that we're trying to rush this through and, there's a little uncertainty in the market about that? Because I think that's something that, we're kind of seeing play out this week and the week prior.
Yeah, it's like the market is waiting for that news. They're waiting for stimulus and vaccine news. And I think the
Right.
market is just gonna chop around until they get some kind of relief. And I think a stimulus is a relief financially, and I think the vaccine is a relief as far as where this economy is going.
Right.
And so I don't like how fast they're trying to get it approved because I want them to do all the research they need to do on it and trials and tests before anybody try it. I don't want to be one of the first ones. And so I feel like, I don't want it to be where they rush this vaccine and turns out months later it wasn't the right thing to do. And then next thing you know, we have another crash because we have another wave of coronavirus that,
Absolutely. And then, like you talked about, the stimulus as well is something where we have a lot of uncertainty about, where those negotiations are going.
yeah.
And that's kind of helping us remain in this trading range that we've been in.
hmm Because everybody hearing one thing, you hearing this side, you hearing that side, and don't nobody know what to believe until they actually see it.
Absolutely.
And
Absolutely.
it's like both parties can't agree. And I mean, I kind of want to be more about America, about this economy and about the American people than a political thing. As far as
Hmm.
who have more control over who. And so
Yeah.
now the rumor is they're going to vote next week. So
Right.
that's the
Right. And
rumor.
they're
And then
saying
next week
that
gonna come, and then it's like, where's the vote? They're gonna take a vacation
absolutely.
or something like that. So it's like he say she say, and it's getting ridiculous. I'm just so ready for it to be done and over with.
Me too, me too. And I think
Yeah.
now's a good time to, that's a good segue into the next section for today's podcast, where we're going to talk a little bit about how we are approaching next week, our sentiment going into next week and our opinions there.
hmm
And I think a lot of that ties into, how this news is about the stimulus and also any type of updates on the vaccine thing. And, you know, transitioning in there is that we've seen this thing where that stimulus news and that vaccine news took a backseat for a little while the market was rebounding, right? And as we, saw this very rapid uptrend across the market, specifically driven by tech. And now that the market's kind of, dwindling a little bit and we're in this very choppy zone uh, where we're kind of stuck range bound. Here, we're seeing that this news is resurfacing, right? It's gaining value
Mm-hmm.
again. The stimulus headlines now for this second round of negotiations are coming up, and they're coming up more frequently. And I think that's driving the market a little bit. And one of the other things we're seeing is the vaccine news as well is kind of being brought up again with a little more, eagerness, with a little more urgency. And that's kind of, affecting our perception of where the market might go from here. So
But
one
don't
of
you
the things,
notice that every time the market go down, we get news about stimulus and vaccine?
oh, absolutely, absolutely. And
Yeah.
that's that, you know, when we're going down, we're also being paired with, this uptick in our uncertainty and also in our volatility in the market, right? And so we're
Mm-hmm.
seeing these where the market itself is making these news events, have more value, and traders are fearing what might come out of these news events and whether that can drive the market down even more, right? And so that's one of the things
Mm-hmm.
that looking into next week, we're kind of worried about, you know, if there's any negative news about stimulus or about vaccines, that's something
Mm-hmm.
that might continue, be an impetus to continue driving us down. If
Yeah.
I'm looking specifically at, volatility as a measure of our uncertainty here, um, we can look at our historic market volatility and where VIX is trading at right now, and it's not that much lower. We had a rebound today, but it's still in a position where we can see volatility start to rise the longer that we trade in this current range, right? The longer that SPY fails to break out higher, we're seeing this fear start to take over, right? And so if there's like the fear greed index in the market where we can measure traders' sentiment, we're starting to see that people are protecting themselves against additional risk, and that VIX here at this point really needs to start decreasing in order for SPY to start increasing, and we need to kind of get some form of closure on some of this macro news in regard to the stimulus and vaccine news and those things that have been like circulating in the headlines all week this week. Moving on from, kind of the COVID and all of our worst fears and stimulus and things of that nature, because, a lot of this news is very negative and very, I would say,
Mm-hmm.
you know, it tends to induce a lot of nervousness or anxiety or uncertainty, not only to the market, not only to traders, but to just people in general. Let's switch topics real quick. I want to talk about some more news, and personally, one of your favorite stocks, Tesla, um, and Battery Day specifically. So, did you trade on Battery Day? How was that?
I did. I did. I did. And I gotta stop doing that. I gotta sell the news, buy
Absolutely,
it and then
absolutely.
sell it. But I didn't risk much, so I risked maybe about $500. But I did expect for it to come out as a positive catalyst for the future. And I think it did. I think they did very well. I think there's some good things that's coming. So I also have my shares for just the whole long term. But I think it was they brought out some good stuff for the future. So I
Right.
was just playing like a little auto contract and bought a put, so I kind of made money either way. Um, but I have faith in Tesla to hold it at least 5 to 10 years because
Absolutely.
they're gonna be big.
Right. And so I think one of the things we saw for Battery Day was this, sharp sell-off
Yeah.
initiated by a lack of short-term news, right? And what I mean by that is a
Hmm.
lack of type of uh, news or product or development that can impact the price in the short term.
Yeah. Hmm.
And so look at like Tesla leading up to Battery Day and now on the other end of it,
Mhm.
we saw this rapid increase in not only the implied volatility of Tesla, but we also saw
Mhm.
this in our expected movement for Tesla. So with that, a lot of contract prices rose and the expected movement for Tesla rose as well. And so I
Mhm.
think that leads to, what ended up happening where we had a sharp sell-off because of how much money was on the table for this particular announcement.
True.
And that's
Yeah.
true. And if,
Yeah.
looking back at Battery Day, like you said, I agree. I think we came out with a lot of good products,
Yeah.
developments for Tesla, announcements, things that are going to lead further down the road to
Yes.
profitability. But some short-term questions that might have remained unanswered, and a
Mhm.
little uncertainty with how these developments are exactly progressing. What we saw today was, Tesla had a pretty strong movement to the upside.
Yeah.
Um, actually re-entered a couple of calls, and now that we closed above 400,
Mhm.
which was the key level here, we can kind of start to have expectations for Tesla to move higher. If I'm just looking here quickly, we closed right almost at 20 points, but 5% on the day. And that's
Mhm.
the kind where, that's gonna give us at least an expectation for movement into Monday that we can kind of play
Mhm.
calls over. And I'm holding long on some Tesla calls here. I have some far dated Novembers,
Mhm.
uh, and I actually still have some October 16s that
Mhm.
I held for the Battery Day announcement, and they've recovered a little bit, not nearly as much as they could have. But I'm going to sit that here because I think now we can definitely start to see some movement to Tesla to the upside, as long
Mhm.
as it's these levels and
Yeah, and they
into
they
next.
about to have the delivery numbers too soon, right?
Yeah, right. And
Yeah.
so we're
So.
going to probably, a couple of different catalysts coming
Mhm.
up soon where, Tesla can probably start trading over 420 back towards
Yeah.
450.
Yeah.
In that range would be my price targets if we can clear 420 from here. And so
Mhm.
that's what, we might see a little bounce on Monday, some pullback afterwards, and then really, if we're looking from a technical perspective, Tesla is still inside this giant pennant that JW and Jervon identified for us.
Mhm.
So we still have some wiggle room there for Tesla to break out of this pennant to the upside,
Yeah.
uh, maybe within the next 5 to 10 days.
Mhm.
So, as far as sentiments moving into next week, I'm definitely going in for a bullish open on the
Mhm.
market. I think we can retrace a little higher from here. I do want us to break that 330 level on SPY, right? 3,300 as a key level on SPX. Tesla, right over here, we can start to head towards our gap up towards 420, and kind of have a bullish sentiment for Monday with
Mhm.
just an understanding that there is some risk, there is some volatility, and you know a little uncertainty towards the latter half of the week and what might
Mhm.
happen there. As long as we're still range bound, if we fail to break out above this 330 level, we might still have room for a short pullback.
Yeah. Mhm. Healthy pullback. So.
Absolutely. And so, as far as news, I think now would be a good time to transition to our Q&A. I don't want to keep you if you have something to do, but feel free to
Oh,
hang
I'm
out.
good. As long
Uh,
as I ain't gotta be with the kids, I'm good.
okay. So we had a couple of questions that members asked about us, or asked for us to answer this
Mhm.
week. And so I'm just going to take a look at some of the ones we had written down and also some of the
Okay.
suggestions. Now, one of the first questions is, how would we use spreads to take profits on a trade? Now, that's actually a very easy strategy. That's something that I can cover very quickly. Obviously, spreads in general are something that you're going to want to kind of become more familiar with before you start trading spreads. But for anyone who's watching and is kind of interested in learning about spreads, that's something that you can start trying out in any margin account with very small amounts.
Hmm.
And so, for example, Robinhood is a free platform, only allows options trading on margin accounts, and is okay for spreads. And so that's something that you can kind of use to manipulate these different types of spreads, whether you're in put or call spreads, and whether that's debit or credit, and kind of play around with that. There's also a lot
Hmm.
of reading material in the Intro to Options channel, and also in our other educational materials. If you're a VIP member, you do have access to a lot of books and resources now. Anyway, talking specifically about how to lock in profits, I'm going to give us an example. Let's say we're trading a call. So we're in a bullish play. It's a naked call that's expiring, maybe next week, Friday. And I held it over the weekend, and into Monday, we gap up and start to collect profits on this trade. How would I try to navigate that trade if I am limited on my day trade restrictions, right? So let's say I close that trade out and I enter a new call and we're still going up in the stock, right? How can I use spreads to lock in profits is the question. By selling a call, you can marry your naked call to a short position, creating a bull debit spread. And what that would look like is, let's say, going back to Tesla, Tesla's at 407. Let's say I have a 410 or a 415 call for next week, and it starts to increase in premium value. I can collect some of that premium value from the contract by simultaneously going short on a call position. What this does is it converts my naked call into a debit spread, right? Specifically where the strike that I have is closer to the money than the strike that I sell. And what that would look like is that I can have a 410 call or a 415 call, and then I sell a call $5 further out of the money. So if I have a 415 call that I already own, I can sell a 420 call. And doing so would convert that into a debit spread position. Obviously, the further out of the money we are, the less expensive the premium on those contracts are going to be. So if my 415 call is, trading at $10 or $1,000, and my 420 call is trading at maybe $5, $500, I can receive back $500 in my account by shorting that further out of the money call. In doing so, effectively what you're doing is that you're collecting some profits back. You're taking money off of the table. Initially, if I just have that 415 call by itself, I would have $1,000 invested into my position. But now by having a debit spread where I'm long on 415 and short on 420, my total investment in the position would only be $500 because I received back $500 when I shorted on that 420 call. Then you have all of the advantages of a debit spread, primarily where you can be protected from volatility, insured a little more against chops in the individual premiums of each contract, and you're protected a little bit against theta, where you might see some premium decay on time decay, right? So really, you can convert a naked call into a debit spread, get all of the advantages that come with a debit spread, and use that strategy to lock in profits. Now, I used calls for this example, but puts would work in the same way, just in the opposite direction. And so you can use debit spreads specifically to lock in profits. And then if you wanted to exit the trade, you would just exit both contracts at the same time. Obviously, there's a lot more that can be talked about when it comes to using spreads and manipulating them in your account. I would suggest if anyone has any questions further about how they can do this for their own account, definitely feel free to reach out to me. Feel free to reach out to one of the admins, and we'd be glad to help you guys out. Moving along from that question, our next question for today was specifically, we're looking at a large mistake that our friend CC Coltman made, where he confused an ascending triangle with an ascending wedge. And so this is something that we saw a lot of people wanted to hear about. We got about, let's see, over 20 people asking to hear about this. And so we're going to take a moment and talk a little bit about the differences between the two, and also using some of those real examples that occurred throughout the week. Specifically at that time, we were looking at Tesla. One moment here. All right, so we're talking real quick about ascending triangles and ascending wedges. Both pennants, triangles, wedges, etc. Basic stock charting patterns that we use quite often. If you have trouble identifying those patterns, then there are plenty of free resources that'll help you to kind of get more familiar with the formation of them. And specifically, the two that we're talking about are an ascending wedge and an ascending triangle, and the differences between the two. So I'm going to break out a notepad here, and I'm just going to draw some very simple lines so that we can kind of identify the differences between these and why the expectations for our exits are opposite, right? So when we're looking at this, what we're looking at is the first we'll talk about is the ascending triangle. So what we're looking at an ascending triangle is going to be a, hold on. Is going to be a play off of a strong resistance point in whatever underlying security it is that we're trading. So let's say, and I'm going to hold this iPad up, see if the camera can focus it a little bit. Can we see that? There we go. So let's say that's your resistance line, and you're bouncing underneath your resistance line, and we are on an uptrend as we see consolidation towards the exit of this position. And so what this might look like is this right here, where now we have our, you guys see that? Resistance line and our support line, and we're exiting off the tip of that point. So that's an ascending triangle. And what might happen to our stock is that while it's in this consolidation area, it is bouncing up and down off of a continued confirmed resistance point. And so what that might look like, I can draw this real quick for you guys, is something where as we bounce off of these levels within the zone, we tend to see momentum to either side fluctuate pretty rapidly, but maybe there's no spikes in volume, maybe there's no real movement outside of this consolidation zone. And so what we could be looking at is something like this, where we have our ascending triangle and an expectation for a breakout above. Now, generally, there's going to be a couple of tests of the resistance level. And so the thing that's happening here as we play this ascending triangle is that we are seeing a battle between bulls and bears, and we're seeing that we receive higher highs as we move throughout this pattern. Our trading range for the stock is consolidating, and our movement is becoming shorter and faster. During the time this is occurring, we can build momentum, and we can begin to have expectations, higher lows, thank you, JW. So that's higher lows along the uptrend line. So what we're looking for specifically is that as we move here along this uptrend line, we're getting higher lows, consolidating, building momentum for an eventual test and break of the upper resistance line. This will be a bullish chart pattern, and our expectation for that breakout is generally that after the breakout is confirmed, we would want a close above that line. We can see a movement to the upside similar to the initial range of that triangle, of that ascending triangle. Now let's compare that to an ascending wedge, right? I'm going to try and draw this real quick so you guys can see it as well. I'm sorry the screen is so far away. Now our ascending wedge potentially could look something like this. Please excuse my drawing, where we now have two lines that almost look like a channel, right? And it almost looks like an uptrend channel for the stock. However, the lower line, that support line at the bottom, has a higher slope than our, what would be our resistance line at the top. And so this is going to function slightly similarly where, we're going to see that as long as this zone is valid, as long as this range is being traded, we'll see movement in between these trend lines here. But what's the difference? Well, the first is that we're not consolidating along a continued or confirmed resistance. We're instead consolidating within this trend. Our trading range is still getting more narrow, but we're having both higher highs and higher lows. So, what we might see it look like is where we're kind of moving on this up and down range right here within this channel. See if I get that to focus. And so now as we're moving within this wedge, we're still seeing some consolidation, but we're seeing something else happen. We're seeing that the rate at which we have higher lows is occurring slightly faster than the rate at which we're having higher highs. Each time we move higher within this pattern, we're moving slightly higher, but not enough for this to be a channel, right? And so the comparison would be if we had an uptrend channel, that would be strict, two parallel lines, something like that, where now the rate of having higher highs and higher lows is equivalent throughout the trend. So the opposite of that is going to be this, where we cannot maintain the rate of higher highs. That slope on the resistance line is going to be lower. And because of that, we're actually losing some of that upward momentum, right? Our buying pressure is eventually going to become diminished. And so at the point of exiting this pattern, we would expect a breakdown to the downside, right? And something that would happen would be that we would see our selling pressure begin to build as we're in this pattern because the bulls do not have enough strength to maintain adequate higher highs, right? And so that's the opposite exit here as an ascending triangle where this wedge now is actually a bearish chart pattern. Now, there's a lot more to be said about how to specifically trade these patterns. On a very basic level, you would understand that, as we're approaching the exit, the movements might happen slightly more quickly with a little more volatility. And we would also tend to look at our time frame that this is developing across, and also the volume that is occurring on each of these retests of the boundary lines to understand when our potential exit might occur, what the strength of that exit might occur, and how that would look if we,
I'm
Uh,
sorry. I don't know how to work this and I don't know what's going on with the computer, but you went
no worries.
blank for a second, so I didn't know if it was me or I don't know what I just did. I don't know.
Your camera's on. I think the app might have broken for a second, but
Okay.
I could
Okay.
hear you, see you.
I'm
I think,
sorry.
yeah.
Okay.
So specifically what I'm looking at here is I would be paying attention to my volume to kind of help me determine whether we're gearing up for an exit where we see a final spike of volume towards the exit of this pattern to give us an indication of upcoming downside, right? As opposed to that ascending triangle where we would be specifically looking for, a close above, maybe an increase in volume and a spike to the upside as well. The last thing to remember is that just because we exit these patterns doesn't mean that these trend lines are necessarily invalidated. And we can always see a retest of one of these lines after exiting the pattern, right? And so depending on the time frame, again, obviously, like we discussed in previous classes, the longer your time frame, the stronger your validation, the stronger your pattern is. We might be able to view a retest and use that to kind of determine whether we can continue movement to the upside. And so, for example, if I'm looking at, sorry, a lot of background noise over here, this pattern, right, where we have a breakout here, and I continue that line, what we might see is something happen where we're actually going to retest that line and break out higher maybe slightly later on in a way where that resistance becomes a support and allows us to bounce higher. And so really, we're just looking at a combination of where our expectations for this pattern's end exists, what kind of momentum is occurring leading up to it, what kind of volume is occurring, and then also specifically what kind of price action is occurring, where our direction is going, to kind of give us more insight into trading. Now I'm going to move on to a couple of other suggestions that we had for today's class. Same thing applies. If anyone has any questions about charting patterns, always feel free to come back and ask. We're always around. Chris 1001 asked for today, if there's a 15-minute squeeze on any ticker, do you sell it after that squeeze is done, or do you keep it for a longer time? Now, there's a lot that can be said about this. And so I won't be able to talk too in depth about this because it might be something that we could talk about for 30 minutes. But to briefly touch upon it, what we're looking at is a squeeze on a 15-minute time frame, and we would look for that in context of any overlap with squeezes on other time frames. JW also wants to chime in the chat. Feel free to do totally. And what we're going to be looking at specifically is how strong the squeeze expectation is, the size of the momentum that we can look for as an exit, and what else is happening on multiple time frames. One of the things that you'll see is when we are looking for a strong breakout or have expectations for a strong pattern. And one of the recent examples that we can look at was if stock is flagging on multiple time frames, right? JW does this very nicely where he's able to identify a stock with potential breakout patterns across multiple ascending time frames. And what I mean by that are time frames where we're going to be looking at longer candles in each different chart. Generally, in a situation like that, a squeeze on a ticker can carry over through these time frames and through these patterns and either give you supported, continued, longer lasting momentum, right? Which would be an insight for you to maybe remain in the trade as you play through this squeeze across time frames. And also give you indications as to your expectations for movement in the stock. You can always pay attention to an individual time frame and something that you're looking at on that time frame, as opposed to the bigger picture, and use that as your indication as to whether you're going to be seeing continued momentum. Maybe your trade is a shorter term trade, or maybe you do have something that you can swing multiple days. JW, definitely feel free to expand on that in any way you want to. And we're going to move on to the next question, because I don't want to spend too much time on that, but we can always revisit it. And that's something that we can do more in depth at a different time if anyone has any further questions about how to maybe manipulate the TTM squeeze or play that type of pattern. Another question was tips for determining a good exit. Give me 1 second. I want to make sure I didn't skip anyone. I know the librarian did ask a little bit about some charting studies, such as our money flow indicator, RSI, MACD. We can skip those for today and always come back to those in a more in-depth section. So definitely a great idea. But for now, we're going to talk about determining a good exit. So when it comes to determining a good exit, obviously the first step is to have a good trading plan. And what I mean by that is you want to make sure that you have expectations for your exit prior to the time that your exit is actually coming up, right? So before you need to actually, exit your position, or before you need to actually even make that decision, you should already have your plan for what type of profit you're looking, what type of movement you're looking, and when you intend to hold your trade for how long. So when we're looking at that kind of thing, what we're specifically going to be looking for is the movement, the momentum at that time, and where our chart lies, what kind of context we have in the bigger picture, right? So I might be looking at, and I'll give you an example. Let's say we're scalping a stock, and I'm making a trade on a 5 or even a 3-minute time frame. Generally, and this kind of goes back to that idea that we talk about, where we like to look at indications and analysis across time frames. What we're specifically looking for is an indicator for an exit. And what I might use for that are going to be maybe my EMAs, maybe some kind of candlestick as an indication of upcoming movement, and the type of candlestick that forms along that time frame, maybe the volume on that time frame, and then also maybe the status of my momentum and what's happening there. And that's on a shorter time frame. And then one of the other things that I would look at specifically is how my 5-minute time frame is trading in comparison to something maybe a little longer, like my 15-minute. And so now if I'm looking at these two charts side by side to identify a good exit, I would want to understand, well, how many 5-minute time periods do I need for the next 15-minute candle to form, right? And I might look at my 15-minute candle and say, what's exactly happening on this longer time frame, and does it give me more time to remain in trade? If I have a really bullish formation on a 15-minute candle, I might say, well, now I might want to hold it for another 15 minutes. And so now I can understand that I have at least 3 more candles on my short-term time frame, if we're going even shorter on the 3, now I have 5 candles that I can look at that are all going to give me increased indicators as to where I can plan my exit. Then planning your exit specifically comes down to a couple of things. The first is that it comes down to what your current contract is trading at versus your initial plan, where your expectations were for that. And in addition to that, what your indicators on your chart are telling you to. So there's going to be what do you say? Indicators not lagging. Well, yeah, there are going to be lagging, but if I'm looking for an exit, I'm going to be using these signals as a potential sign of my upcoming movement. And so it's keeping in consideration what's happening currently with my expectations for what's upcoming. And then when I determine that, maybe my trade might start to trade in the opposite direction, or, maybe now's a good time to exit my trade because we're overextended and I'm expecting a short-term pullback, that's when I'm using multiple time frames, multiple indicators, and my personal sentiment to indicate to me now it's time to exit this trade. There's that compounded with what my initial goals were in a trade. If I have a goal of 100 or 200% profit, I'll give you an example. That Tesla call the other day that I had was a weekly. Went from, I think Gervon alerted it at $200 just about. I think this was yesterday actually. And I said I'm holding it to 200% profit. Once that hit, I exited the trade. Maybe there was more room for the upside. Maybe there wasn't. I set a goal in that trade for 200% profit on the weekly, and I exited it regardless of whether I thought Tesla could move higher or lower from there, because I stuck to my trading plan. I hit my profit target and I got out. Now, if I held that trade, there probably was more room to be made, more profit on that 400 strike. I think it ended up going, maybe $2, $3 higher in premium, but that's not the point. The point is that I made an exit plan and I stuck to it. So that's something that you're going to get more comfortable with the more you trade and the more familiar you get with your own charting setup. So that's one of the things that we preach in all of the lessons that we teach here. And it's that you want to develop a trading setup that allows you to feel comfortable with what you're looking at. You don't want to overwhelm yourself with information, but you want to provide yourself adequate information to make an informed decision. And one of the things that'll happen once you get used to your setup is that you'll be able to be more reliable on those trades, more reliable on those entries and exits, and be able to act upon them more quickly and with more conviction. Now, I think we have room for about one more question today before we wrap it up. It's going to be a little bit of a shorter session today since I am solo hosting. And we're going to look at our next topic. I'm going to skip a couple of questions here. We had one about active trader, which we can always come back to, and someone asked about what the road to 4,200 will look like, which we kind of talked a little bit about next week's sentiment and our long-term expectations, kind of dependent on what's happening in the short term. So that's always something we could talk about later on in the news section for next week. I'm looking back. How do you determine if it's going to be a bullish day or a bearish day? For example, SPX levels and UVXY levels, which I think is a good question, especially with how volatile things have been. So from the very, basics, you would want to look at your levels and whether we're closing above or below them to give you an indication into your potential movement for the following day. And that's something we talked a little bit on earlier in today's podcast, where we talked about how we wanted SPY to close at around or higher 330 so that we can break through that level, and that how I feel personally the 400 crossing point on Tesla was also a strong bullish level. Now, when we're talking about different levels, they can be generated from a variety of your analysis sources. And that could be support and resistance levels that you've identified on your own charts. But the very basic would be pivot points. And so we can use pivot points on our chart on a daily time frame, and whether we've closed above or below them, to give us a little insight into whether that was a bullish or bearish close. Right off the bat, if we look at today with SPY's strong close, we can begin to have an expectation for a bullish open on Monday. Now, with that being said, there are a lot of other resources that are very valuable into determining whether we can have a bullish or bearish close. And so those include things like, a bullish or bearish open for the following day. And those are things like our dark pool, our flow, and any type of resources there that are going to give us additional insight into the type of volume that was occurring, whether that's buy or sell pressure, and the amount that we can expect this volume to correlate to in terms of our price movement. So if we see a lot of, maybe dark pool buying, a lot of flow that's really bullish, we can use that in combination with things like pivot points to kind of get expectations for the following day. So I would say look into pivot points, look into using those. There's other resources that you can use to generate additional key trading levels, but some of the best key trading levels are going to be ones that you identify on your own, right? Important levels that we might need to close or break through in order to see further movement in a direction. And so there's a little bit of everything in there when it comes to, using your support and resistance, using your pivots and using your news, using your flow. All of these kind of pool together to give you a sentiment into the next day, or your expectations for the next day. So I would try and play around with your chart and use these levels, whether you're drawing them yourself or you're getting them from an indicator, to kind of develop your own expectations for the day and see how those play out. And you can probably begin to get a little more insight into how the market's working, and how we can also determine whether there's going to be a bullish or bearish day, like you asked, depending on these levels. With that being said, if there were no other questions, I think we're probably going to wrap it up today. I'm just looking here in our chat to see if anyone had any other last minute questions. Okay. And then the last thing is, for anyone who had any questions that were not covered during today's podcast, just feel free to hit me up. We can always talk about them in private or cover them during next week's podcast. Just a friendly reminder that I am always available by direct mention. You can always DM me on Discord, and we can always talk about those types of things. Chris, I did see your question about Max Payne. If you want, that's something that we can talk about in private, or we can talk about it in the Discord. Either works. But I am going to end today's recording, today's podcast, and we'll chat next week. All right. Well, thank you guys so much for attending. We'll be back, and have a great weekend, everyone. All right. Talk soon.